Hey George, we just found a great home. We put it under contract for a price that we think is a great value for the home. And we found out that the appraisal came back $20,000 less. Why is that a problem and how do you fix it? Thanks for coming into thecreditjungle.com today. This is George Anderson.
George of the jungle, strong as he can be.
And we are starting to see, it's springtime and the rates at the moment seem to be improving a little bit. So we got a lot more buyers out there looking at homes. And unfortunately, most of these homes are going to need an appraisal on them. So what happens when an appraisal comes in lower than the agreed upon sales price? So let's just take an example here. We've got a home that went under contract for $600,000. The buyers thinks it's a great deal. The sellers agreed to it. They got all the terms worked out. And all of a sudden, the appraisal comes back and it misses by $20,000. Now, an appraised value of $580, okay, that's as percentage-wise, that's not that much of a miss. But the term loan to value, okay, which is what I've got on here. I've got loan and then I've got to value. When you are purchasing a home from a third party that you're not related to, it's an arm's length transaction, the value of the house is determined by the lesser of the appraisal or the sales price. Now, when you're refinancing a home, there is no sales price, so we're just using the value, whatever comes back on the appraisal on it. But on a purchase transaction, we basically have two markers that are looked at. One of them is what did buyers in a negotiation that both parties agreed upon to consider as a sales price. But if you're getting financing for that, and if you have a maybe less than 20% down, you're likely going to have to get an appraisal on it. So if that appraisal comes back in at or above the sales price, you're okay. And the thing that I like to explain to borrowers is that an appraisal in a purchase transaction can only screw the deal up. It cannot make it any better. If the appraisal came back over on this side of the equation, if it came back at $700,000, the buyers are going, wow, this is great, George. Well, we wouldn't have to put any money down, right? Because we agreed to buy it for $600, it's worth $700. Why do we need a down payment? Can't we just finance the entire $600,000? Well, no, the bank is going to consider the value of the house the lesser of the two. So in this case, if it appraised for $700,000, they're going to say, well, no, you still have to have your down payment, whether that's 5, 10, or 20% down. You still have to have that down payment based upon the lower of the two numbers. Well, all of a sudden now we're in a situation here where we've got a 580. Well, if you're trying to put the minimum down like 5%, well, the 570 divided by 580 is not 95%. Here, this is 5% down here is a 95% loan to value loan. Well, over here, you're at, I'm rounding up here, you're at 98% over here. And if you had 10% down, well, it's 10% down of 600, but it's only 7% down of 580. So here your loan to value here is 93%. So not all is lost here. So there's a couple solutions, and I'm going to just discuss a couple of obvious ones, and then we'll do a follow-up video on this, on maybe some of the more details on how to fix some of the problems if you can't get the immediate ones done. So one of the options is that if this is a conventional loan, and if you are working with a lender that has multiple appraisal management companies that they can work through, one of the options is if you agree to pay for it, you can just go get another appraisal and you can try your luck on that. So that option's available for conventional financing. The other option would be is just go to the seller and say, hey, Mr. Seller, I know that this is the price, but this came in the value. We don't want to pay more for the house. Would you please shave 20 grand off the sales price of the home and let us buy it for 580 instead? And then you lower the sales price, which again will change these numbers here so that the buyer's 5% down isn't 30,000 over here, but it's actually going to be, 26,000, 29,000. Okay, so it's going to save them $1,000 on their down payment. Those are the easy fixes. Have the seller lower their sales price or just get a new appraisal. Stay tuned because we're going to dive into this in a subsequent video in just a couple of minutes. Thanks for coming into thecreditjungle.com. This is George Anderson. push button, get Mortgage Professional to get solutions that not everyone may have access to. We'll talk to you soon. Bye-bye.